Okay, here we go. Good morning. Oh, this is a lot of sun on my face. I don't know if you guys can see me.
Mm-hmm.
Okay. Well, my name is Angela Henderson, and I'm actually recording this session today so that anyone who's online can participate in it. Okay, that's better. You can see my face now. So this is an industry overview session. It's going to be probably about 20 to 30 minutes, depending on how many questions I get. But this is intended to give you just a little bit of taste of a little bit of information about the industry. A lot of adjusters who get their license don't have any follow-up training or information about who they're applying to and when they're trying to get jobs. And a lot of times that makes for frustration because they're thinking about the work in a very traditional sense based on what they've done in their past, and that's natural. So I wanted to do this little session to kind of help people. I talk to people all the time, and they're always confused about who the hiring bodies are, and so they're trying to figure out how to approach someone about getting a job, but since they don't know who they're actually applying to in a greater sense of what their responsibilities are, then they're not being successful and they're getting frustrated. So that's what this is for, just to give you guys a taste, and thank you for joining us. This is recorded, so anything that you ask is going to be captured in this video, but don't let that stop you from asking questions. That's the only way you're going to learn, and makes for a better video for other people who might not be participating live today. So just a little bit about myself. My name is Angela Henderson again. I have been in the insurance industry since 2002. I started in the industry in workers' compensation. My dad actually encouraged me to get into insurance, and I said, I will never work in insurance. It is so boring. And he was at me since I was 18, and I finally, good morning, I finally succumbed, and I started working in insurance, and I found I had a niche for it, but whatever the word is.
Mm-hmm.
So I worked my way up into a management role, and I started in management with a team of 3 people. And I worked my way up to a team of 35, where I had assistants and people working under me as supervisors. So I've had quite a little bit of experience. I've worked with contractual issues, putting together networks for vendors. And that's actually how I came to be first acquainted with independent adjusters on the property side, because I was in workers' comp. And after working with those IAs for scene investigations and different things, it really intrigued me about field adjusting. And so when I made my transition from the DC area out to California, I decided to change kind of my roles at that time as well. And here I am. I have recruited and interviewed and trained so many people just as part of my corporate roles. And so now I've been in the field. I just recently came out of the field for Hurricanes Florence and Michael in North Carolina and Florida. And I was invited to start doing some additional training with another well-known trainer, Stephen Harmon. And so I've spent the last couple of months focusing almost exclusively on training and just kind of building additional training materials for young adjusters in the field. So the crux of this presentation is talking about the employers in the insurance industry. A lot of folks have heard of a carrier and heard that term, but they don't know what that actually means. And so they confuse a carrier with an IA firm. They're all hiring companies, but they have different roles. And so it's really important for you to understand when you're looking for a staff position, that you understand when you're looking for a staff position, that's not going to be an IA firm. An IA firm has a responsibility to staff employees in the event of the need for rollover staffing from a carrier or a third-party administrator. They're not the party that has a contract directly with the insured. And for that reason, they don't do the kind of supervision and management that people are accustomed to in their traditional roles. So as an adjuster, as a brand new adjuster, when you get your license and you're thinking that, okay, now I'm going to go ahead and get hired, you've heard a lot about how people get hired sometimes through social media and Facebook. You think that those people who are advertising are the insurance carrier. No, those are third-party independent staffing firms specific to the insurance industry who have a relationship with a carrier or third-party administrator, but they don't have any liability for the way the claim is actually handled. And that's why you don't have to go through interviews. That's why you can just sign up on rosters and start to receive claims in your inbox whenever they have them, because they have only responsibility to find those people who meet like a checklist of requirements. So if the carrier who gave them the staffing order, let's say for example with a hurricane, let's say it's State Farm, and they have 1 million active policyholders in the area where the storm is supposed to hit, and they know from their own prior statistics that a third of those policyholders are going to file claims. That leaves them with 300,000 claims they need to handle, anticipated claims to handle. And if they only have enough staff to manage 100,000 of those claims, that leaves 200,000 claims that need to be handled by someone else. So that's why you'll see those rollover orders, and you'll see 5 or 10 different IA firms saying, okay, we're hiring for State Farm because they have an order to fill enough staff to handle 200,000 claims in totality. So they'll flood the field with all those adjusters, and they don't give them supervision because that's not their role. Their role is to make sure that they get qualified staff out into the field, and qualified being you've met this checkpoint criteria that the carrier has set forward. So what the carrier does, the carrier has the actual responsibility to the insured. They have a contract of adhesion with the insured, and it is the carrier who's going to be held liable if something does not get properly handled with the claim file. So you're going to find that as a carrier, they have a lot more, they have the most skin in the game, and because they receive those premium dollar payments from the insured, and they have a relationship with the state regulatory bodies, if they're not doing things properly, then they could also lose their right to do business in a particular state. So when you see someone that's saying, I'm gonna file a complaint with the Department of Insurance, it's your carrier who's gonna be most concerned with those complaints. If you're looking for staff work, you're gonna be looking to apply to a carrier. And carriers have a different criteria for hiring than an IA firm will, because of their extreme responsibility and concern about claims administration. So they're going to require certain things like a college degree, maybe sometimes an associate's degree if you're looking for a claims assistant role. And so as a new adjuster, I've seen a lot of people who've gotten their license to handle claims through a trainer, and then they get frustrated because they can't find jobs with the insurance carrier, and they're not understanding that the criteria for this carrier is different than that of an IA firm, and that's why you have to have a little more credentials and a little more training just to even get an entry-level role in that organization. Good morning and welcome. And so your third-party administrator, sometimes you're going to have a third-party administrator that also has a role as an IA firm, but most likely you're not going to have that. So you'll see people refer to IA firms as TPAs. The only TPA that I know of right now that's actually in the property game for hiring is Sedgwick. They acquired Cunningham Lindsay, a really, really great IA firm, a couple years ago, and they've been kind of converting and changing the industry for IA firms since their entry into the field. But that doesn't mean there aren't any others that are out there. I just don't know of any. Your TPAs are, your carriers are like your State Farm, your Travelers, Allstate, and Nationwide. Those are the insurance companies, your IA firms, your really big ones that are named immediately recognized, like your Worley, your Pilot, your April, Renfro, even the Best IRS. The Best IRS is a staffing company at its heart, and it's gotten into the property game as well. So they're doing things similar to what an IA firm would do. So you can see just from that brief explanation, all the different parties that are involved. If you're trying to find a job, you want to make sure you know who you're applying to so that you know how to tailor your application. Your TPA is going to, they have a contractual relationship with the carrier, not with the insured. And so when you're working with a TPA, you're going to hear terms like E&O, errors and omissions, and what they're doing when they're talking about saying, just be careful about your claims handling so we can avoid E&O claims, is they're saying that the carrier is going to hold me financially liable for any errors that we make in claims administration. Therefore, that money comes out of our pocket and our bottom line, so don't mess up, right? And a good example of E&O or exposure and regulatory exposure. I handle claims in California primarily, and in California, there's a requirement that you have to file a status letter every 30 days to notify the insured of the status of their claim. And so failing to do so, if you are working with a carrier based in California, failing to do so may change the carrier's ability to manage the claim to the way they prefer. And so that could cause some financial liability to the carrier, because if there's something that they wanted to deny, but they fail to properly notify the insured, then they may not have the ability to do so. I told you guys I came from workers' comp background. My strongest example of errors and omissions or errors coming back from claims administration comes from forms handling. In the state of Virginia, you don't have to have a license as an adjuster to be a claims handler, but in the workers' comp field, there are state forms that have to be filed, and the forms actually manage the claim file where the state is concerned. So if you have a form that you're supposed to file notifying the state, okay, we received a claim, now we have to file a form saying that they're in active medical treatment. Now we have to file a form saying that they're receiving benefits from time lost from work. If you fail to file forms, you can actually change the way the claim can be adjudicated. If you're trying to deny a claim, you don't file that form in a timely fashion, you may have to accept the benefits and pay those benefits out to the insured or to the claimant, and workers' comp is a claimant. And so let's say you notify the carrier, okay, we failed to file this form on time, we have to accept the claim. They'll say, okay, and then every time that they do their review with your company, they'll check and see how many dollars have been paid out based on you accepting the claim over the denial. So if you end up paying out $15,000 to get that claim settled and closed, then the carrier is going to come back to your TPA and say, you owe us $15,000 for the damages for the errors in claims administration. So you'll see TPAs going to be highly concerned with E&O. And if you have an IA firm that also has a relationship as a TPA, then you'll see they'll be highly concerned about that as well. Any questions before we move on? Okay, so some of the roles that you can see in a corporate environment are listed here. You have your claims assistant, you have your claims adjuster, your senior, your litigation specialist, your team lead, supervisor, and your claims manager. Those are the roles you're going to interact with most frequently, whether you are a desk adjuster or a field adjuster. So if you're a field adjuster, you're working primarily with the claims adjuster, maybe you're a team lead for your hiring IA firm, and then maybe the supervisor for the actual carrier that you're doing business with as an independent. But when you are working as a desk adjuster, If you don't have any prior experience, most times you're coming into that organization, into that carrier organization or TPA organization as a claims assistant. And that's because they need to train you and teach you all about insurance. They need to get you accustomed to the customer service aspect and working with and familiarizing yourself with the basic terminology associated with insurance and about their particular products that they sell. And then after you spend some time as a claims assistant, they'll move you up into a claims adjuster role. Some companies that you'll work with before, they may have you come in as a claims assistant and then hire you on as a claims adjuster in a matter of months or weeks, depending on how many, just basically how many claims they have and their staffing needs. Sometimes for the larger organizations, you might find yourself as a claims assistant for several years before you get a chance as a claims adjuster. And sometimes they'll require that even if you came in with your associates as an assistant, they may require that you have your college degree before you can become a claims adjuster. So just understand that if you're looking for staff work, you're gonna have those sometimes prerequisites to hire, and that could be a barrier to entry for you. A lot of folks who are coming into the insurance industry as an independent, they're coming in because they heard something about how much money they can make, right? And they're kind of being, they're disappointed by some of the salaries they see online when they go to Indeed looking for jobs. That's the difference between the salary is the difference in the, I guess, the relationship that the company has to you. When you are an independent contractor, you are signing up with that firm saying, I am completely self-sufficient. I have all of my own equipment. I've already been pre-educated, so I know exactly what I'm doing out in the field. You don't need to provide me with any support. I am responsible for my own travel. I'm responsible for my own assistance and any kind of insurance. And so as a self-sufficient body, you can expect to earn more, and you can expect to demand a little bit more in pay. And that's why those roles pay more. Those field adjuster roles are going to pay the best if you're an independent contractor, because you have the most exposure and the most liability as an independent contractor. If you are a desk adjuster and working on the inside, you might get paid a similar salary as a field if you're an hourly adjuster, but you'll never have the kind of the open, almost open checkbook that you can have if you're working in a fee schedule or a component basis out in the field, because your earnings are only limited by the number of claims that you can handle and the number of claims that are available to handle when you're in the field. But when you're at a desk, you just work an hourly rate, and that's what you get paid. And then going back into the staff roles, your claims adjuster, you may work in that role for 5 to 7 years before you become a senior. You may work as a senior adjuster for another 3 to 5 years before you can become a litigation specialist. And then, again, on and on for team lead, supervisor, claims manager. You can be in the industry coming in from a claims assistant role, and it may take you 20 years just to get to the team lead position, depending on how large of a company you're working for. I was working in Chubb's office out in Los Angeles before I went out into the field, and there were supervisors there and employees there who had been with the company was Ace USA before it became Chubb, but there were people there who had been working and came in as claims assistants and had been in the industry for 25 years, and they were just getting their first shot as team leads. So understand also that if you go into an organization where there are a lot of people and competition is high for these higher roles, then you have to spend more time before you're able to get those opportunities. Any questions about the roles? You guys are quiet this morning. All right, so salaries. Everyone always wants to know how much they can get paid. I pulled these salaries from payscale.com. They are asterisks because these are averages. This is not salaries are much higher in California and probably in the largest cities and states. And then they tend to be lower in some of the smaller, more rural areas, just depending on, what companies are paying based on the cost of living in that area. So don't be discouraged when you see some of the salaries, because these are, again, averages. But a claims assistant sometimes will be earning, just minimum wage. When I started off in adjusting, I started off for a company called Claims Management Incorporated. It was Walmart's captive TPA, which captive only means that they didn't have any other clients. So Walmart and Walmart stores were their only clients. And I started off making $7.10 an hour. And I walked into my first day. We had a trainer, we were fortunate. A lot of companies don't even offer trainers on site. So we come in and we have a trainer the first day. They say, this is insurance. And they spend time talking to you about, deck pages and insurance contracts. And then they say, well, throw that out the window because there is no policy contract for workers' comp. You just have to, learn the regulations of the state, whatever you're going to handle. So it's like, oh, okay, that's fine. Then the next day was, this is a claim file. So this is how you document your claim file. This is kind of the information what I need to see from you and the timing what I need to see from you. I'm okay, I can handle this. So the third day, they're like, okay, here's your pending. They gave me over 100 claims for a desk that had been vacant for 3 months. And it was people who were losing time from work, people who had active litigation going on. And I always say that I kind of got jumped into the insurance industry. You're going to find people who work in an office environment have the same kind of experiences a lot of times. Some of the carriers are really good about their training programs, but a lot of times, especially if you have a smaller carrier, they're not going to have the time to spend 2 to 6 weeks training you before they put you into a desk. They're hiring you because they need staff right away. And for that reason, if you go to a staff role, if you can get staff roles, once you've worked in an office, you can pretty much get a job in any place in the country as a staff adjuster, because once you've been trained, people will compete for you. So that's great. But the starting pay is not great because they are training you. They're giving you benefits. They're giving you full access to their resources, full access to attorneys. They're giving you some structure. They're giving you management. They're giving you feedback about your claims handling. And they're giving you an opportunity to fail. They're giving you an opportunity to become licensed. They'll pay for licensing. Sometimes they'll pay for higher education. So that's why some of the salaries you're going to see coming into a staff environment will be lower, because the commensurate benefit package is what they're selling versus you being independent and being responsible for all that on your own. It's not unusual to see a claims adjuster, entry-level claims adjuster, make $40,000 a year. It's not unusual. In Northern Virginia, where we were hiring claims adjusters straight out of school, so we paid a little bit more for those, also because it's Northern Virginia. But we were paying anywhere between $40,000 and $50,000 for starting salaries, and sometimes that $50,000 salary was something that had to be negotiated. And we had applicants coming straight out of law school. So you can see that, that higher education, you're competing with people who sometimes coming out of better schools in the country are looking for the same roles that you are. And so that's why you can have some setbacks or some delay before you finally get a staff position, just because of the competition that you're dealing with. Once you get to the senior claims adjuster salaries, those salaries are pretty accurate. Litigation specialists, all that's pretty accurate. On the team lead side, I have seen people go from entry-level positions as an adjuster to a team lead within a 2-year period. So even though I gave that whole spiel about, 20 years, 25 years, if the company is small enough and the need is great enough, they may take you and take your raw material and the prospect of how you can better serve the company into account, and they can promote you to team lead straight from claims adjuster. And in those situations, you'll see those lower salaries. They're not going to pay you top dollar when they're going to be teaching you and training you and giving you those opportunities. But you can, jump the broom, so to speak, and get those higher roles just at a lower salary. So that's why you see some of those really low salaries. Also, in the operational sense, if you're an operational team leader supervisor or customer service team leader supervisor, you'll see those salaries be fairly low. You can get into an hourly rate at that point when you're dealing with operations. Any questions? Gosh. Okay, you guys are all muted, so I hope you're not talking to my computer and not realizing it. All right, so moving on to the expectations of an entry-level adjuster. The expectations of getting a license are just the very first level. Whether you are working in the field or working for an insurance company, your license is it's just one of the basic things. I kind of liken it to when you're starting in school, right? You go to school, kindergarten, probably one of the first things you might learn is your ABCs. And so once you got your ABCs down, that everyone congratulates you for learning your ABCs. That does not mean you're ready to graduate from high school. You're still very young in your school journey. And so when you get your claims license as an adjuster, you're in the same position. You've now just given yourself entry to this industry. However, you still have a lot to learn. Some people are going to be able to learn quickly based on their prior life experiences. Some are going to learn quickly because they're hungry and they need to. And so they have this drive and they continue to press. The way that I learned in property, a lot of it was self-taught, but again, I had years in the industry before I started working in property. So I had a basis I already had a really strong basis for the policy side and the management of claims and an understanding of the industry overall before I started layering in being a field adjuster. I've worked in the field and I've worked in the office on large loss desk assignments as well. In the few years that I've been working in property. And I'm going to tell you, if I didn't have that background, I could have been lost. If I got an opportunity and didn't have that training, I would have been lost. And so you want to learn the terminology. You want to develop a strong sense of customer service. Service is not just being put on a happy voice when you answer the phone. Service means being responsive to people as best as you can. Being able to keep track of requests and get back to those requests and kind of timely responding to requests when you promise and things of that nature. So you have to develop a really strong sense there. You want to be able to communicate with all parties, meaning you have to be able to explain to all parties in their language what the position is of the insurance carrier, whoever you're representing. So if I were talking with, if I were talking to the claimant or the insured, I am going to talk in a very, very basic, not condescending, but just, I'm going to break it down to the lowest common denominator so they can understand I can't throw around acronyms and industry terms and believe that they're going to understand my communication in that regard. Even if you're contacting a professional in the industry, you don't know their level of experience either. So you have to be able to understand and communicate at their level so that you can, do your best to ensure that whatever position you're taking and representing is understood and agreed upon. You have to have kind of it takes nerves of steel to negotiate, because whatever your position is, you've come to that position based on a subjective thought process. So you're applying certain factors to your evaluation, but there's always room in there for negotiation. And so when you are negotiating with another party, you're starting low, hoping not to go high, And you have to have the strength to sell that position without making it seem like there's more room for additional monies or additional benefits or whatever. So if you are negotiating with a contractor or something like that, and the contractor is willing to negotiate their price, you have to be able to get the best benefit for the insured to get the work done, and also not give away the whole farm, because sometimes there's inflation built into contracts that contractors or a public adjuster may present to you. And you have to be able to apply the policy language to the issues, and understand what the policy actually says in order to give feedback to your insured and anyone else who's a party to the claim. Basic mathematics skills. I admit I am not the strongest with certain types of mathematics skills, but you do need to have at least strong resources. If you can't, if you're not a mathematician, you have to have strong resources to be able to make sure you're accurately calculating what's due and payable. And then if you're a field adjuster or working independently, you have to have the ability to travel as needed, which means it doesn't mean that you have to necessarily drop everything on a whim, because you get to choose what type of role you're going to work in. However, you need to be able to understand and have support for making sure that when you do have to travel, that your home life does not fall apart, and that you have the funds and the means to travel when needed. Any questions there? Of course not. Okay. So I'm going to talk to you a little bit about some terminology. This is not, in any sense of the word, exhaustive. This is some of the more basic terminology you're going to see probably most frequently. And so I'm going to talk to you a little bit about what these terms mean and how they're applied. This is the area people usually have questions and concerns about, because they're trying to understand these terms and concepts. So I know you guys are have been quiet so far, but please don't let me go forward without
and then they'll say zoom in, right? They'll ask you to zoom
without don't let me go forward without understanding what I'm talking about, please. Okay, so deductible. Deductible is I guess layman's terms, is the insurer's participation in the loss. I'm not going to give you guys definitions because, of course, you can look online and get the definitions for stuff. But it's the insurer's participation in the loss, and it is their requirement with every insurance contract that the insured also have some responsibility for, I guess, the indemnification or being made whole. And that's why you'll have a deductible with every policy and with every claim filed. You're not going to ever see an insurance company that takes 100% responsibility for a loss, because if that's the case, then what barrier is there to the insured filing claims and just taking money from the carrier every single time they feel like it? You'll see deductibles that are going to be higher for certain types of events like hurricanes. And not every hurricane is going to have a high deductible that you have to pay. You have to look at the policy language. Usually there's some kind of endorsement for hurricanes that says if there's a named storm or a named event by the National Weather Center, then that named weather event triggers this higher deductible that you have to pay. So if your normal deductible is $500, and then you have a hurricane deductible of $7,500, that's the arrangement that the insured made at the time of the contract negotiation of that policy. And so they agreed to pay the $7,500 as offset in damages whenever they have a structural impact from a hurricane. Okay. Depreciation. The concept of depreciation is taking into account the age of the materials that are being prepared. Depreciation is applied even when there's a deductible that has to be paid. Those two things are not mutually exclusive. So if I'm sitting in a really nice dining room right now, and I can't tell how old this house is, but when you're in the field and if you went out and you're the insured doesn't know the age of the home, they don't remember, you can always Google that and find it on Zillow or something. So you say, okay, this dining room was damaged. The home was built in 1950. So it's, what is that? 69 years old. The house is 69 years old. But this dining room does not appear to be 69 years old. It's been very, very well maintained. Maybe it's been remodeled or something in the years since the home was built. And if that's the case, you're going to ask the insured when these materials were last replaced. If they tell you that, let's say the flooring, I can tell the flooring in here is fairly new. Let's say the flooring was replaced 5 years ago. You're going to depreciate the flooring in your line items by 5 years. And let's say the flooring appears to be even newer than the 5 years. There's almost no age or wear. You may choose as the adjuster to reflect only maybe 10% depreciation on the flooring versus a straight 5 years, because if, let's say the flooring has a value of $1,000, and when you put in 5 years of depreciation, it takes the initial payout to the insured down to $600. Now the insured has to find a way to get the floor replaced for that $600 versus $1,000. So they have to either pay the $400 up front out of their own pocket, or they have to find someone who'll do the work for $600 and then wait for their, if they're paying out of pocket and they're paying the additional $400, they have to wait for their money to get reimbursed by the insurance carrier. So if they're taking really good care of the property, you may put a percentage of depreciation in because it gives the insured that additional benefit when they're doing their repairs. And not all states or not all insurance carriers are going to require depreciation be applied up front. So you want to find out from your carrier or from your IA firm if you're calculating depreciation into your loss estimate at the time that you write it. But that's kind of the concept and how it's applied. Questions about that? Okay. Exclusions are pretty much what the word says. It's some type of, there's some type of reduction that's being had as a result of an exclusion. So your base insurance policy, let's say your HO3 is your basic homeowner's policy, out of the box, just like if you had a computer out of the box, my laptop out of the box might have 4 gigs of RAM available for loading my systems and to run my systems up front. It may have 1 terabyte of memory in my hard drive, but only 4 gigs of RAM. So when I run my software, my Xactimate software, the minimum software requirement, the minimum RAM requirement for Xactimate is 4 gigs of RAM. So if I'm running my laptop with 4 gigs and I have other systems I need to run at the same time that are backloaded, but they're still running, then I'm going to have a very glitchy experience with my Xactimate. It may close on me. It may fail to save certain things. It may run extremely slowly and just take me twice as long to write my estimate. So I may decide I need to upgrade. I'm gonna add some RAM to my laptop so I have a better experience. It's more customized to what I need my laptop to do. That's what your basic policy is. When someone gets their homeowner's policy, they have this out-of-the-box policy, and then they will get an endorsement to either add coverage or they'll get an endorsement to address an exclusion in coverage. So they want certain types of coverage, so they'll make sure that this endorsement gives them the benefit of whatever coverage, like hurricane coverage, for example, and they'll pay the additional amount for that endorsement to address the exclusion that's written into the base policy. Questions? You guys just know-it-alls today. Okay. So I talked already about indemnification. Indemnification is is, like I said, making the insured whole. With indemnification, there are other qualifiers or other considerations depending on where you're handling your claims. So there's a concept called diminution of value, and some states will require that you also consider the diminution of value at the same time that you're looking at the indemnification piece. And so as an adjuster, let's say you have a television, and insured has a covered loss, and as a result of their loss, they have damage to their television, and they had a Samsung television that was worth $1,000. Okay, so as the adjuster, you're handling the claim, and you're looking online, and you say, okay, well, you have a brand new TV, 35-inch TV. We're going to replace your TV. Here's the money for this TV, because we found an Acer brand TV online that's $569. It's in your local area. It's at your Best Buy right around the corner from you. You can go pick it up and you're good to go. You're made whole, right? No. So even though you've given this person a brand new TV because they have replacement cost value on their personal property items, you've not made that party whole under a diminution of value consideration, because you've not given them the same quality of television that they originally had. So they were insured for their personal property. They had a Samsung brand TV that's worth $1,000 current value replacement cost. You gave them an Acer brand new TV, 35-inch, that's only $569. It's not so much the cost that is the loss of the value, it is the actual quality of the brand. So because there's a difference in quality, then you've not made that insured whole. So you've not indemnified them. You guys got that? All righty, moving on to peril. Peril is similar to cause of loss. You're going to see peril referred to as cause of loss in some situations, but it is pretty much the precipitating event that triggers coverage. So your peril, examples of perils are like wind, fire, lightning, smoke, water. Those are perils. And you can have multiple causes of loss. Let's say you have an example of a windstorm that knocks out the power, and power loss is also a peril, knocks out the power to a transformer that's on your corner in your neighborhood. And now, because you have a loss of power for a certain number of days, your refrigerator freezer has thawed, and you have water and meat juices that have thawed out and run down into your flooring and damaged your wood flooring in your kitchen. So now the water that damaged your wood flooring is causing you to require repairs. Okay, so your triggering peril was the wind. If you have coverage for wind, then you're going to have coverage for the consequential damages caused by the additional loss causes. But if you don't have coverage for the initial precipitating event, then you're not going to be able to recover for the damages to your floor under your insurance policy. So as an adjuster, you need to make sure that you're getting down to the original cause of loss in your interview process so that you can identify which peril applies and whether or not there's coverage under the policy for that peril. Smarty pants. Next one, actual cash value versus replacement cost. Those are they appear to be pretty self-explanatory in the way they're worded. As an adjuster, you're going to be applying your benefit payments or your damages payments based on whether or not the policy reflects replacement cost value or that for that line of coverage or actual cash value. I will just say with coverage A, which is your main dwelling, a typical HO3 policy will have RCV entitlement written into the base policy. That's because it benefits all parties for you to be able to repair and replace your items in your home at the replacement cost value, today's value. Because if you don't have that kind of coverage, then you can lose the value of the home. And then the insurance company is insuring a property that no longer carries the same value that they have insured. So you'll typically find that in the base policy. With a manufactured home, you may not find that RCV is written in for the main dwelling. Sometimes the insurance policy is going to have ACV, actual cash value, as the base qualifier. And you have to, as the insured, understand that that is what you have purchased. And then if you need RCV, if you want replacement costs, you have to purchase an endorsement to get yourself to a level of replacement cost at the time of an actual loss. Questions? Loss of use and prohibited use are terms that are handled and administered under the additional living expense coverage line. So you'll see terms like ALE, which is additional living expense. You'll hear about loss of use and prohibited use. They're not synonymous. Prohibited use is where a government official has said that you are, as the insured, are no longer able to occupy your dwelling because of a danger to the area, and we're trying to make sure you're safe, so you have to evacuate. So with recent hurricane events, or fire events, sometimes people are evacuated for weeks, sometimes evacuated for months. You might be evacuated for a whole month because the area is unsafe, but if your policy only has a limit of 14 days for prohibited use payments, then you can only request reimbursement for the evacuation up to 14 days of expenses. Loss of use is typically loss of use of the dwelling because of the actual covered damages. It's not the same as prohibited use. So if you leave your home under mandatory evacuation order, and when you come back, your home is untouched. So the storm that happened caused 0 damages, but I had to be gone for 2 weeks because of mandatory evacuation. If my deductible is less than the amount of my expenses, I can still file a claim under my insurance policy for the difference or my prohibited use expenses. But if I come back home and now my evacuation order is lifted, but I come back home and my home's been damaged and it's not livable as determined by the insurance company and verified by the insurance company, then now I can receive benefit payments under loss of use if I have that coverage, purchased with my homeowner's policy. All right, so I'm moving on since you guys have no questions. I think I'm moving on. Okay, so kind of in summation, this session was just talking a little bit about, as an adjuster, who do you think you want to work for, right? How do you want to be trained? How do you need to be supervised? Do I need supervision at all? Am I already self-sufficient to where I don't need to have someone giving me feedback on how to manage a claim, how to evaluate the loss? If I need that type of assistance, you may, as the adjuster, you may need to look for work as a staff adjuster working for an insurance carrier directly. So you're going to have those lower salaries, but you're going to have higher buy-in and participation from management and from the insurance carrier. They're going to support you in a way that you're not going to find with an independent structure. So even though you're licensed as a all lines and you're independent adjuster, you may start to pursue work down that line. If you feel capable of doing the work on your own without having that direct feedback, but you don't want to be in the field, then you're going to be looking for work as a desk adjuster, working through an IA firm, not through a carrier or TPA. And you're still going to have an expectation of going to the report location wherever they need the work done, but you won't be working in the field. You'll have a little bit less liability exposure because you're not dealing with potential injuries from being outside working on a roof, or dealing with animals or any kind of mold in the environment or whatever you might come to for your inspections. And so just figure out kind of what structure works best for you, and then that helps you know where you should be applying. And with regards to ongoing training, even with a staff role, you're going to be expected to find some type of ongoing development and training opportunities for yourself in order for you to continue to move up. So if your goal is to start as a claims assistant and move up to be a manager, you also have to understand the company is not going to put you in those roles. You're going to have to train and continue to develop yourself in order to achieve those roles. So in doing so, you have to look at what kind of support do I have? Who do I need to get on my team? Lots of adjusters will say, well, I need a mentor. And they'll contact me and say, I need a mentor, Angela. Can you be my mentor? And I used to say, yes, of course, sure, no problem. But I found that people who were asking me to be their mentor didn't understand what they were asking for. So I started asking, what do you think you need as a mentor? Let me make sure I can fulfill that role for you. A lot of times when they're asking for a mentor, they're asking for someone to train them. That's a different situation than saying I need someone to give me, feedback. So look at who you have available in your network. Social media is a great place to find additional support without having to say, hey, be my mentor. You may have people that you admire, that you follow, and you just look at their page and say, okay, they give great advice, they give great feedback. I can get my additional support there. You may have to go to a formal trainer and say, well, I don't have in my network the ability to learn what I need to learn through my resources. So I need to come to you as a trainer to further develop myself. If that's the case, then you should seek that out. Not, as a self-employed person, you can't be resentful of what you have to do to grow. And sometimes people resent having to pay for training or having to travel for training. You might be getting free training, but you have to travel to, Oklahoma or Texas or Florida for a free training event. It lasts for 5 days, and then they have to spend $1,000 in travel expenses and hotel expenses and food, and they're resentful of that, and they're saying, well, I got my license and I expected to be able to get work right away. I don't understand why I have to go to these different events and I still have not been hired yet. Again, you are still growing. You are at the ABC level. So maybe you go to your first free training event. Now you know your 1, 2, 3s. You're not writing paragraphs yet. You're not writing term papers or anything like that yet. You're not ready to graduate. So understand that if you do get a job at a very early stage, at your ABCs and 1, 2, 3 stage, there's going to be additional growth that you need to do along the way. Don't think you can stop there just because you got a job or a contract, okay? So that's pretty much all I have scheduled for us today. I know everyone was pretty quiet during the session, but this is your opportunity to speak up. Do you have any questions?
No.
All right. Pardon?
I said no.
Okay. All right, Ms. Veronica. Well, thank you all for joining me, and just be on the lookout. I have some additional things that are coming up over the next coming months, some really exciting things. I just can't wait to be able to share once it's official, and see you for the next one.
Okay, do you get copies of this PowerPoint or no?
Yeah, I'm going to actually make this video public, so you'll be able to see it if you want to come back to it.
Okay, perfect.
Okay?
Angela,
Yes.
I have a quick question. How do you register for the upcoming conference? I'm
Oh,
trying
the
to
one
find
that's in Dallas?
Yes, in Hurst.
Okay. So the website, the Learn to Adjust website, has a classes tab at the top of the page when you first log on. Just hit that classes link, scroll down to the bottom, and the registration link is down there. Now, I
Okay.
know we were already at capacity some time ago, but I've had some people who've dropped out because they can't travel for the conference. So I'm going to be opening up a few more spaces today as I pull some people out. So within the next maybe 15 to 20 minutes, you should be able to log on and potentially see a couple of spaces available.
Okay, thank you.
No problem. Thank you all for joining us, or joining me, I should say.
Thank you, Angela.
All right, bye-bye.
Bye now.